When the closing bell rang here yesterday, the Dow was at 6,594. That is the lowest close since 1997. It dropped more than 280 points. That came after a couple of key things happened. First, Citigroup stock fell to a little more than $1 a share. A little perspective, a year ago it was $22, and GM fell below $2 for the first time ever. But this morning it is the new jobless numbers that have everybody worried. The Labor Department is expected to report that the unemployment rate rose again last month, and analysts expect that it will be over 600,000 jobs lost. That would mean an unemployment rate of 7.9%, and that could be only the beginning. CBS News correspondent Priya David is here on the floor with me to talk more about that. Good morning, Priya.
Maggie, good morning to you. And overseas markets are still rocky as well. Japan's Nikkei index slipped another 3.5% here on Wall Street. Everyone's going to be watching those unemployment numbers that are due out a little over an hour from now. At events like this one in New York City, nearly 4,000 job seekers are looking for any lead that could land them work.
It's a buyer's market right now. And the people that are manning those booths have got a lot of resumes to choose from. I just hope they pick mine.
Long lines and thousands of resumes have become the reality of an economy that has now lost over 4 million jobs in the past 14 months, the largest economic contraction in the post-war period.
This is the worst we've seen for the job market since 82 and may end up being the worst we've seen since the Depression.
State by state, the unemployment rate has hit some harder than others. Michigan at 11.6%, Rhode Island at 10.3%, California at 10.1%.
Each of the areas hit hardest by this recession. Michigan because of the automobile industry, Florida, California because of the housing crisis, Rhode Island because of manufacturing, are all in desperate straits because they've been right at the center of the economic storm that's come this time around.
You fill both full and part-time?
An economic tsunami that has depleted jobs and will continue to devastate.
We know it's going to be really bad, and we're looking for an unemployment rate that peaks out around 9.5% next spring.
And some think 9.5% may not be the end, and we could peak out in the double digits before this is all over. That would mean an additional 3 to 4 million jobs lost. Come back to my fellow correspondent and anchor, Maggie Rodriguez.
Thanks so much, Priya. Here's a little perspective for everybody on just how bad things have gotten here on Wall Street. As we mentioned yesterday, the Dow Jones Industrial Average reached its lowest level in 12 years. And this year alone, the Dow has lost nearly 25% of its value. Joining me right now is Doreen Mogavero. She is a trader and also president of Mogavero Lee and Company. Good morning to you.
Good morning. Let's hope it is one.
Yeah, let's hope it is one. But I think, is this one of those rare days that we can probably predict that it won't be, given these dire unemployment numbers?
I'm not sure. The futures have been very mixed this morning, and I think a lot of what's anticipated is that it's going to be a bad number. So it may be that we've already seen a lot of that yesterday. Depends on how bad it is.
But unemployment means people have less money to spend. It's a vicious cycle, right?
Oh, it is, and I think there's no question that the economic data overall is not good. But I think the market has seen such an erosion over the last few weeks, we may have anticipated that. And if the numbers come out, even if they're bad, if they're slightly better than expected, we may see a little bit of a push upward, I'm hoping.
What is
a very mixed bag this morning.
What is the feeling here on the floor, and what does that mean for the rest of us on Main Street?
Well, I think there's certainly an awful lot of concern here on the floor. This in great deal is Main Street as well. You know, we all have our 401ks invested in the market as well here, so we have some of those same worries, obviously. Financial sector has had a lot of contraction this year. We worry about our own jobs as well. So I think the floor is in great part in sync with Main Street.
If the FDIC borrows $500 billion from Treasury as it hopes to and secures our deposits further, do you think we'll see things start to come up?
Well, I think certainly that's a good confidence builder for the investing public. Certainly to know that we have some backing if something should happen would be, I think, good for confidence, which is one of our main problems. There isn't a lot of confidence these days.
We sure need some. Doreen Mogavero, thank you very much.
Thank you. I appreciate it.